Hello and welcome to the day ahead. It is Friday, the 18th of November. I'm Andrew Gagan. Well, global equity markets moved lower overnight. Wall Street stocks fell on hawkish comments from Fed speakers, while signs that the labour market remains tight prompted bets that monetary policy will continue to be aggressive. Most S&P 500 sectors were lower, led by losses in utilities and materials. Stocks, specifically Cisco shares, rose after the company lifted its full-year revenue and profit forecast as supply chains ease. Elsewhere, shares of Macy's surged after the department store chain raised its annual profit forecast with evidence of resilience in demand for its high-end merchandise. And Chinese e-commerce giant Alibaba's quarterly revenue has come in slightly below expectations as COVID curbs in China and a worsening economic outlook dampened consumer spending. Revenue growing 3% to $29 billion in the 3 months to the end of September, lifting the share price. Interest rates need to keep rising. That's the tenor of the latest comments from Fed speakers. St. Louis Fed President James Bullard has said the Fed's target policy needs to rise to at least 5% from the current level just below 4%. If you do less now and you have more to do in the first quarter, generally speaking, it probably does not make a lot of difference in terms of the macroeconomics, he said. While Minneapolis Fed President Neil Kashkari has said it should not stop hiking until it's clear that inflation has peaked, saying, "I need to be convinced that inflation has at least stopped climbing, that we're not falling further behind the curve before I would advocate stopping the progression of future rate hikes." Well, the latest data shows weekly jobless claims fell last week in the States to 222,000, despite widespread layoffs at companies such as Amazon and Meta. And home building in the States fell 4.2% in October to be the lowest level in nearly 2.5 years as rising mortgage rates bite. In the UK, Finance Minister Jeremy Hunt has announced a £55 billion plan to fix the budget, which includes a raft of tax increases and cuts to public spending. And the prospect of the Fed lifting rates further has pushed US Treasury yields higher, the 10-year up to 3.78%, for the 2-year at 4.45%. And the US dollar rose along with those yields. The Aussie dollar, it did fall around 1%, currently at 66.9 US cents. Well, it is expected to be a flat opening for the Australian share market. ASX futures, they are currently just in the positive territory there. Oil prices have fallen more than 3% on the rising US dollar and bond yields, which reflected the prospect of more aggressive rate hikes in the US. This raises concern that demand for oil will weaken in the US and in China, where COVID cases continue to rise. Iron ore futures were up to $93 a tonne, and base metal prices were down, nickel, copper and tin all off. And the gold price has retreated on US dollar strength. The crypto market is relatively stable, with Bitcoin trading below $17,000 US. And that is your day ahead. We'll see you again on Monday.